Inflation, that's another thing. Oh my god, inflation is returning. It's going to be the 1970s again. I understand. I hear these stories from you because I see them all over Twitter. Inflation may be on the rise again, but there are many details around it that people aren't paying attention to, and the truth is that there are numerous factors that will not only keep inflation under control in the long run, but will also significantly increase the quantity of monetary supply accessible, and the amount of liquidity in the markets, which can only mean one thing. And that's what we're going to speak about in today's video, because it means big things for cryptocurrency, particularly XRP, and none other than Raoul will tell us exactly what we need to know. So press the like button and let's hear what he has to say. Where did you obtain this from? I do not comprehend. You are listening to some random terrible macro folks who have never operated a portfolio tell you something. And you're like, see, he said it, he mentioned it, inflation is coming back, we are all going to lose money. I got it, we've all got a net worth in this whole fucking trade, we want this to work, please just concentrate. So wage growth, as measured by Wage Tracker, is decreasing. As a result, wages will remain flat for the foreseeable future, if at all. It depends on whether I completely shatter it. I'm concerned about it. Oh, house prices. Well, property prices are a huge drag because there is a 17-month downturn. As a result, rising housing prices will lower CPI shelter, which accounts for the majority of the CPI. If it is the largest portion of the core CPI shelter, it will not be increased. When interest rates fall, what happens? Owner equivalent rents fall, dragging down the CPI. Check out the Cleveland New Tenant Rent Index, 3/4 lead. It's vomiting. It's dropped below zero. There is no inflation, my friends. Let us remove shelter and consider all goods that are less sheltered as shelters, resulting in a lagging 1.9%. I mean, really, guys. And then we'd apply the Mount Fuji chance of truth, which Julian and I have been employing for years. But we compare all of the inflation episodes, particularly the main inflation episodes, to this one, and guess what? Inflation is lowering. So we will see cyclical inflation later on. There is nothing structural. We aren't going back to the 1970s. That is exactly what will happen. No, it is going to happen. Tariffs are not inflationary. It was not inflationary the last time. It won't happen this time. None of it will happen. It'll be a fairly ordinary cycle, so declines are for purchasing the cycle top again. All that fucking noise on X. The cycle top occurs when the top does not reach its peak early. Oh my god, this is the worst. I'm really scared. We're not even close to the core danger indicator. Have we gone overboard? No. No, we're approaching the Bitcoin valuation model. Are we overvalued? No, nowhere near. Let's compare it to the 2017 cycle. Are we nearing the top? No, we are fucking close. Will we follow this exactly? No. Are we going to do well based on this? I believe so. I believe it will rhyme more than people expect, and that the cycle will be greater than expected. Virtually every signal over the last 16 years has pointed in the same direction. They are assuring us that this cycle will continue for an extended period of time, and quantitative easing, which we've all been waiting for, is almost here. And starting to sell any asset, whether it's real estate, stocks, or cryptocurrency, right now is arguably one of the craziest things you can do. It's like waiting years and years for something to happen, and then giving up about 10 minutes before the finish line. It makes no logic at all, and what Raoul is about to share with you will prove it, so listen up. For Nasdaq, for those of you who still bother to trade equities, as I know some of you did, they are following the same trend. It all feels like a repeat of the previous Trump, because he has essentially the same policies with the exception of the new technology stimulus. So let us go back. Julian discussed this in his presentation, but I want to hammer it home for you. You've all got PTSD from the last cycle. It ended early. Is this going to happen again? Am I going to lose money? I'm never going to round off my profits? Will I die? Will I have to consume Bud Light for the rest of my life? Or may I have champagne? All these stories are blah 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 blah. The orange zone market increases, right? However, this was not the case in 2021. So what happened in 2021? Oh, the ISM has peaked. Remember what Raoul said a minute ago, when the ISM surges you should be frightened. Oh sure, the ISM peaks in March 2020 and 2021. Previously it peaked in January and February 2018, guess what, that was its peak. Also 2013, it works every time. So where are we now? Oh, we are at the bottom of the ISM. Oh, how dumb of me to be concerned about the ISM and the market peaking. For fuck's sake, people. So I'm not even sure what this chart is. Oh, from the halving we've just done. Is it the halving or the low? We've only done 8x's from the low, we didn't do 85 times 46, it's really started. As I have stated, liquidity reached its top in March 2020. We are currently negative in terms of liquidity. If I utilize the global M2, we're only positive. However, we are still far from reaching a liquidity peak. As previously stated, the ISM reached its high in 2021, so let's check into it. That was what happened in March 2021. Look at that. The ISM and financial conditions were both declining. Well, it has a high of over 60, now let's look at the current one. Are you ready, kids? The opposite, it is approaching its lowest point, and the color green, the financial conditions index will move the opposite way, and the last time we did this it went up significantly, blah blah blah. Here's the chart again. Everyone is asking, when is my banana zone? It has failed. The banana zone is a period of time and price movement that is complex, because it occurs in bursts, followed by corrections. So the banana zone started in September of last year. The market appeared and performed exactly as it always does, the correction that follows the first phase of the banana zone. So there's the rectification phase, followed by the banana zone phase 2, which goes fucking lala, it goes bananas. Then, guess what? The second correction phase takes place, followed by the final blow off top, and you have to be embarrassed. You must be ashamed by all of your whining when you look at that chart and see how small that squiggle is for the correction period. You have had to feel embarrassed. Oh, I forgot you bought ICE tokens, and they've dropped 90%. I tried to tell you that I gave you the don't fuck this up thesis. If possible, avoid using leverage. Generally allocate 90% of your portfolio to the top 5 cryptocurrencies of your choice. You'll be alright if you don't FOMO. Don't do stupid stuff. Don't get hacked, and store your belongings safely. However, the majority of people did not. So, even if you haven't been following Raoul Pal's counsel, you still have the ability to essentially unfuck your destiny. I always call for the same item. 90% of your money should be in extremely solid investments. We're talking about XRP, HBAR, and other American-based cryptocurrencies that are changing the game, such as Caspa and a few more. These are my thoughts on the best way to proceed. However, placing a large sum of money into a number of high-risk meme coins or AI coins among other things, will eventually ruin you. And yeah, you may occasionally get incredibly lucky if you diversify, but it's not really worth it when you can almost certainly make a lot of money if you put 90% of your earnings elsewhere. So, with that in mind, you may spend 90% of your revenue to trade on BTCC, while simultaneously receiving a 10% incentive on first-time deposits. If you use my connection, and the remaining 10% of your portfolio, you can consider performing some leverage trading, which I am also doing with about 10% of my whole portfolio to earn even more money. And I've been able to double and triple the funds in there several times in the previous 6 months, and you can do the same. So sign up for BTCC, and get that 10% deposit incentive. Get some extra benefits of up to $10,000 per person when you sign up using my link in the video description below. Also, join our Discord community so you can see and copy my trades as I make them, and press the like and subscribe buttons if you love the content. I'll see you guys next time. Goodbye.